China Vanke, the state-backed giant once labeled too big to fail, just failed. Bondholders rejected every single rescue proposal. A 2 billion yuan bond is due Monday, and the doors just slammed shut. This is not a delay. This is the edge of default. And this is where it gets dangerous. Between now and June, Vanke faces 13.4 billion yuan in loans coming due. No extensions, no mercy. A wall of debt and nowhere to run. Markets have already passed judgment. Vanke's bonds have collapsed to just 20 cents on the dollar. From near par to fire sale levels. That's not fear. That's zero confidence. Banks aren't stepping in. They're stepping away. Credit lines are frozen. New loans denied. Even existing financing now demands collateral. This is what a credit chokehold looks like. Ratings agencies are sounding the alarm. S&P calls the situation unsustainable. Fitch warns sales could fall another 20%. This isn't a temporary slowdown. This is structural failure. In China, homes are paid for before they're built. Now imagine the developer collapses mid-construction. Trust evaporates, buyers vanish, and the entire system begins to seize. Home prices peaked years ago. Since then, they've fallen back to 2018 levels while construction costs and debt exploded. Builders bet on endless growth. The market said no. When cracks widen, officials don't fix them, they hide them. Sales data frozen, pessimistic posts censored. When transparency disappears, risk multiplies. Even state-linked lifelines are pulling back. Shenzhen Metro now demands collateral not just for new loans, but old ones, profitable units locked, assets pledged. The safety net is gone. Credit growth is collapsing. Households are paying down debt instead of borrowing. Money is being destroyed from the system. That's how deflation begins, why companies like Vanke are suffocating. This isn't staying inside China. Offshore bondholders are preparing for restructuring. Global investors are pulling capital. Contagion doesn't ask for permission, it spreads. China's middle class is exposed. Their wealth is tied to property. As prices collapse, spending collapses with it. When confidence dies, consumption follows. Real estate once powered nearly a third of China's GDP. When housing stops, jobs vanish. Construction stalls. Entire supply chains freeze. This is recession pressure building fast. Exports won't save China this time. Global demand is weakening. Imports are falling. The outside world isn't coming to the rescue. Where housing goes, stocks follow. We've seen it before. When credit contracts and confidence breaks, equity markets don't stand a chance. This is where preparation matters. Reduce exposure to China-heavy assets. Be cautious with emerging market bonds. Increased liquidity. In deflationary risk, capital preservation comes first. But chaos also creates opportunity. Safe havens matter. Timing matters. Strategy matters. Those who stay disciplined don't just survive collapses, they profit from them. The storm isn't coming. It's already here.